Welcome to another exciting episode of The Trading Bell. This week, we are coming to you from Barclays Kenya headquarters, and we'll be speaking to the man leading this great ship, Jeremy Awori. He's leading a bank that is on the verge of making a major transition into Abssa. How will the bank manage this transition? He shall be walking us through this. Well, let's now take a look at his profile.
Jeremy Awori is a Chief Executive Officer at Barclays Bank of Kenya Limited, a position he assumed in February 2013. Prior to joining Barclays, he held various positions within Standard Chartered Bank, among them CEO Standard Chartered Tanzania, Regional Sales and Performance Director at SCB Middle East, South Asia and Africa, and Head of Consumer Banking in SCB, United Arab Emirates. He also served Standard Chartered as Executive Director and Head of Consumer Banking for East Africa. Jeremy has in addition lived and worked in the UK, North America and Asia. He completed his Masters in Business Administration from McGill University, Montreal, Canada, and holds a Bachelor of Science undergraduate degree in Pharmacy from Manchester University in the United Kingdom. Furthermore, Jeremy is a board member of the Kenya Private Sector Alliance, Abssa, and former chairman of the Kenya Bankers Association, where he sits in the governing council. He is additionally a member of Young Presidents Organization and an Aspen Global Leadership Institute fellow. Jeremy is married with 3 children. His hobbies include swimming and several other sports.
Thank you so much for making time for us.
Good to see you.
Well, very composed, as much as consumers in the banking sector still unsure where the bank could be heading with this new transition. Perhaps let's just begin by where next for Barclays?
Yeah, I think Barclays as a business is now entering into its next exciting chapter, and we're actually really looking forward to it. But we recognize for some people, or for many people who have known the brand for the last 100 years, they've obviously got an emotional attachment to it, as do many of us.
Sure.
But I think the future is very exciting. You know, the world is changing so rapidly, and I think it's quite normal for businesses to evolve, and Barclays is no different. So we'll be evolving into the Abssa brand between now and 2020, and comes with that lots of opportunity. The Abssa brand is a Pan-African brand with global reach, and has been around for a long time also. It's one of the biggest financial institutions across the continent, and they're very supportive of the business here.
Okay.
So what we're looking to do as a business is really get closer to customers, really be there to bring the customers' possibilities to life, and also make a difference in the societies in which we live and operate. So we've got a lot of focus on both retail customers, SMEs, corporate customers, and we're going to use a mix of innovation. And innovation is more than just technology, to provide state-of-the-art, cutting-edge technology and solutions to our customers, and hopefully make their lives easier in the future.
All right. And Jeremy, you would agree with me that this transition is quite leaving consumers with lots of questions, for especially the average consumer sitting down there in Kendu Bay. Just wondering, is Barclays being sold? Is Barclays totally getting out of business in Kenya? What really would you tell such customers?
Yeah, I think the first thing is that Barclays is not exiting in the way that maybe people understand. What Barclays has done is it's reduced its shareholding in the Abbsa group, and that's in South Africa. Abssa actually is our main shareholder here in Kenya, and has been for the last 5 years. So that hasn't changed.
Okay.
And one thing that I wish to really reiterate to a lot of people is Barclays is still the single largest shareholder in Abssa. Today it is still the single largest shareholder in Abssa. It is just not the controlling shareholder. So for our customers, I think what they need to rest assured of is that the transition, we're going to manage it very carefully.
Okay.
Yeah. Abssa has a commitment to Africa, has a commitment to Kenya. It's a very strong bank in its own right. Just to give you a sense of scale, the group has over 42,000 employees, over 10,000 ATMs, 1,000 branches, and a balance sheet that's $100 billion, which is bigger than the size of the GDP of Kenya. So it's a strong It's a strong brand.
Okay.
Now, our responsibility is to make sure the transition is as smooth as possible. Our products and services are not going to change for the negative. If anything, they will improve. And we've got lots of innovation. So we will take our customers and our stakeholders with them. There will be no big bang. All of a sudden, you see the Blue Eagle is gone.
Oh yeah.
We will make sure that we communicate in good time how that will work.
All right.
And any customers that have concerns can always talk to us, and we'll give them the detail they want.
Well, thanks for the assurance. I'm actually one of the customers who has had a dormant account.
So we need to activate that first.
Now at least I'm well briefed.
Yeah.
So Jeremy, let's take the conversation forward now.
Yeah.
When it comes to innovation, right now the banking sector is going through a major turbulent time, especially with the interest rate cap, and of course changing dynamics around lending, where we are seeing mobile lending platforms coming into the market. And as a bank, when it comes to the plank on innovation, what is your strategy?
I think innovation is going to be at the core of our strategy. And innovation has multiple aspects. There could be the technology innovation, there can be product innovation and process innovation. So we look at the three in their entirety. One of the things that I've committed and I'm driving in Barclays Bank here in Kenya is that innovation will be at the core, and that we want to use digital and be a digitally led organization. So we look and say, how do we do things? How do we do things digitally? And that all processes are up for review in that basis. And why is it we're doing that? Because ultimately everything around innovation should have the customer at the center of it. We should not be doing it for any other reason than if it's going to improve customer experience or improve the value that customers get out of our products. The advantage of innovation is allows you to do things very consistently, especially if you're using digital. It allows you to do it 24 hours wherever you are, especially mobile banking platforms.
Sure.
And allows you to do it very quickly. Before, the days where your banking was 9 to 3, now it's 24 hours wherever you are. Whether you want to transfer money, now you see with our Timiza product is a classic example of innovation, where we've got our mobile app. That app allows you to transfer money, to pay utility bills, to save money, to transact, as well as to get loans. And you can open an account and get a loan within less than 5 minutes from your phone. Yeah, no going into the bank, no paperwork. And that's the kind of transition we're looking at. So we see innovation going forward is going to be a convergence of all different technologies and channels. Yeah, you know, whether it's WhatsApp, Facebook, using different phones, whether it's the iPhone or an Android phone, and just figuring out how do we offer great customer experiences, and that's what's going to drive us going forward. And we have many different things that we're working on, many of which have never been done here in Kenya. Obviously, I can't talk about them until we launch them.
All right.
But we're excited about trying to improve the customer's experience going forward.
All right. And Jeremy, still staying with this question.
Yeah.
Innovation is critical right now for banks, but it comes at a cost in terms of getting the systems in place and, of course, training the staff. And the other element of innovation is that it will sort of collapse your hierarchy, because at the end of the day, you are looking at branchless banking, where convenience is now the king when it comes to customer needs. And as much as you are keen on innovation, how big a cost will this be on your balance sheet?
Yeah, innovation, it does cost money, and that's what I think a lot of people forget. They sometimes see the end product, not realizing that billions of shillings have been invested. In our case, we've spent multiple billions of shillings upgrading our platforms. Because you remember the days of, the early days of Windows. We have now moved on as a software. So if you don't continually upgrade your platforms, you can't build and introduce innovation and APIs to connect to other systems. So we'll have to spend those billions, but what comes back is different processes, hopefully a cheaper cost per transaction, and we have to get returns, obviously. And the more we can align convenience, cost, value for the customer, I think customers will actually take up on the channels. I think a lot of the challenge now is not to take analog processes and make them digital, it's to rethink the entire process. Who would have thought you'd be getting music from your phone? Yeah, who would have thought you'd use your phone to take photos? Yeah, do you see what I mean? So we are very cognizant that technology and innovation transcends industries. So your competition is not another bank. Now it's a fintech. It's a telco. It could be anything. So if we're not if we're not scouting and looking after the whole horizon, we could find ourselves irrelevant. So I think it's from us, we look at it in a positive way, in an urgent way, and I think customers will hopefully see the benefit. And as we innovate, we work with the customers through the innovation process. I don't think you can just tell a customer this is the innovation you want. I think it's co-creation, it's partnerships that will make the difference going forward.
All right. And Jeremy, one of your peers, who is also a corporate leader from KCB, Joshua Igara, described what is happening in the banking sector as an Uberization, where if banks do not respond, they'll be taken by the tide.
Yeah, I think the world is changing so rapidly that you have to respond, and you also have to have your strategy around how you want to navigate these waters. As I just said, you've got convergence of technologies, you've got industries that are stepping into other industries. So you're right, Uberization has changed the way we do business. And the question is we have to disrupt ourselves. If we don't disrupt ourselves, then others will disrupt us. So we have to now start thinking about how do we remain relevant? What is it that customers want? And how do we give it to them as cheaply and as cost effectively as we can, while still delivering a return for our shareholders? Because at the end of the day, we still have shareholders who own the bank and they need returns.
Interesting. And I like your thoughts on that. And Jeremy, as much as technology is a pivotal role right now, at the end of the day, banks have had a difficult time when it comes to downsizing the staff because of a number of dynamics. And in total, it is estimated that the banking sector in 2018 did shed off about 2,300 staff.
Sure.
And of course, it's not any manager's joy to see staff exiting based on the business model of the company. For you, what will define the next phase of the bank at a time where you are struggling to embrace technology and then you're looking at your staff costs? How do you strike a balance?
It's probably one of the biggest challenges, because you've got a world that is changing around you. So if you don't remain relevant, you will be just obsolete. So you have to embrace technology. So there's two aspects to it. One is also taking colleagues along with you on that journey, and change is always difficult. So one of the things we look at, and it's a leadership challenge. Like for me, if I don't use technology and I don't automate, then I become irrelevant. Then sometimes there are job losses as a result. So the way we look at it is we need to work with our employees, with our colleagues, to prepare them for change, prepare them for the changing environment, and upskill them to the new opportunities. I think some jobs will become commoditized. They'll be robotized. So we, for example, have implemented robotics. That will make certain jobs fall off. That's just what it is. But at the same time, we are growing. So what we're doing is we're going to hire people in other areas. So that's why we need a thriving economy, because if the economy is growing, then we can provide banking services and we can grow. Let's take insurance. 3% insurance penetration. If we could grow that to 20%, there's a whole bunch more jobs, not just in our sector, but also in the insurance sector.
That's true.
So we look at it that jobs are changing, work is changing. They pretty much said now that they estimate that anywhere between 50 and 60% of jobs can be done by machines. So does that mean machines are all going to do our work? No, because machines can't, you can't use machines and replace judgment, for example. Not entirely anyway. So what we will do is we will use things like data analytics, artificial intelligence, machine learning, to give you better experiences, to be able to predict what products you need when, but at the same time, upskill our employees and our colleagues to be relevant, to give the services we need. And people ask, will branches disappear? I say, I don't think so. Even in the West, there's still many branches. But I think what will happen in branches will change. I think we'll be adding more value. Talking to you when you want to buy a home, what are the things you need to consider? If you're investing for your children's education, what do you need to consider? How much should you save? How much should you use for transactions? How do you manage your credit? That's the kind of thing that I think we will evolve into in the future.
All right. And what are some of the low-hanging fruits you see for the bank when it comes to areas that will lead to exponential growth, especially in digital finance?
Yeah, I mean, I think one of the things with digital finance is it allows you to scale very quickly. So I'll give you an example with the Timiza product, which is our mobile banking app.
Yes.
We moved from 0 to more than 2 million customers in 130 days. Yeah. We had less than 1 million customers in the last 100 years. Yeah. So when you just see how quickly you can scale,
it's a lot.
It's a lot.
Yeah.
So we've almost, and now that number is more than 3 million. So we've tripled our customer number in less than 200 days. Yeah. Now, that comes with it attendant risks and opportunities. So speed is going to be core. Making sure the controls, obviously, there is going to be important. But ultimately, there's still a lot of opportunity. And to be honest, there's more opportunity than there is an availability of time to execute. So what we're doing is we're focusing on fewer areas where we feel we can really compete and deliver value. And we hope that customers will value that and choose us.
All right. And as we wrap up, Jeremy, I mean, a lot is expectation really when it comes to regulation.
Yeah.
Right now, we still have the big talk of the interest rate.
Yeah.
Something I would also want you to maybe just give your brief remarks on, as well as what other areas can the government now spearhead when it comes to regulation, especially in digital financing, where we are seeing companies trooping to Kenya to start up various forms of lending, and they're not sort of captured in the bigger scope of regulation, which sort of disadvantages you and creates another parallel economy.
Yeah, I think this is a big challenge. It's a big challenge at a leadership level, at a regulatory level, at a government level. I think there are various positive things that are happening. First, the government is embracing technology. You can see through the e-citizen and e-government initiatives, we're taking things online. That's got to be the direction of travel because it's convenient. It also makes sure that you're much more efficient and you can deliver services much more cheaply for Kenyan consumers and the public. The challenge around regulation is how do you regulate industries now that are not as defined as they used to be? Before, banks used to be just so you are a bank or you are not a bank. Now you've got tech fins coming in, tech companies coming in into finance. They don't actually technically need a banking license, so they're not regulated by the central bank. So
are you suggesting the CBK needs to also respond by doing some internal changes in their regulation?
I think it is inevitable, because what is happening is you, in order for you to regulate, you have to work with what is going on within the industry, within the economy. And I think they're very positive, by the way, around embracing this change. What I think they need to do is to be able to have the right resources who are able to define the regulations that will be pro-business, while still doing, obviously, what they need to do to protect consumers, to make sure that the banks are run properly. So I'm sure we will see that. That's why we're even talking about things like blockchain. So we'll manage that with the regulators going forward. But if we have too much regulation, we'll become uncompetitive. So it's about finding the fine balance that will allow us to bring products and services while making sure customers are protected and treated fairly. All
right. I did like it when you said the Blue Eagle is not going anywhere.
Yeah, the Blue Eagle will not just fly off without us making sure everybody is fully informed of what's happening.
All right. And how soon do you expect to change the name?
The process will basically be one where we ease into the transition. So you've already seen, as part of our adverts, as part of the Abssa family. So we start introducing Abssa. People get to know Abssa, what it stands for. And then what will happen is you'll see certain sponsorships with the Abssa group branding. But it'll be more, I would think it'll be closer to the 2020 point. So it's not going to happen. It's not something where next week you suddenly see that there's a massive change. No.
All right.
We'll make sure we communicate fully.
We look forward to this transition.
Thank you.
As a customer and hopefully a shareholder in the future.
All right.
Well, time is far much spent. Many thanks, Jeremy.
Thank you very much.
Pleasure hosting you on the show.
Thank you for having me.
Well, and that has been our conversation with the CEO for Barclays, Jeremy Awori, who ends the interview with a very interesting quote where he says, if you do not disrupt, you'll be disrupted. Well, many thanks for your company. Let's now take a look at